Selling your business. A few years ago, I was brought into a company that had by their investment banker. So an investment banker is a individual typically who's hired by a business owner to help him sell his or her business. And in this case, the business broker, the investment manager, investment banker, called me up and said, "Jim, we need your help because the accounting is not in great shape." And well, that was a total understatement because there was no accounting. The company was in the business of manufacturing automotive accessories, and they manufactured those accessories in Huntington Beach, California. They had two brothers that owned the company that started it. They were doing about 30-40 million in revenue, which is really good. And they were making, I want to remember, like $4 million a year. So they was very profitable, but they never really decided to invest in an accounting system. And so they had no financial statements. Every year at the end of the year, they had an order management system. So when somebody ordered a product, it would go into a system and then they would manufacture it. But they never really did any accounting system, which I've actually never heard of before. But what we had to do was go back and using the bank statements, create financial statements going back 3 years. Because if you want to sell your business and if you don't have good accounting, you're going to leave all kinds of money on the table. Because the business investor is going to come in and look at your numbers and say, I don't know if this company's making money or losing money or what's going on because the accounting is so bad. In this company's case, there were two things going on. They didn't have accounting. So we had to create the 3-year financial statements, but they also weren't managing inventories, so they were just expensing the inventory, the raw material, the steel bars that they were buying. Whenever they bought them, they were just expensing them. And okay, that was great for tax purposes because you're getting an immediate write-off, but for financial statement purposes, it doesn't do you any good because if 1 month where you bought a lot of raw material, it looks like you lost money. In another month where you didn't buy any raw material, it looks like you made a lot of money, but neither one is correct. So in that situation, typically those kinds of companies would sell for $30-40 million, let's say. And when we went through the due diligence, we actually got a offer for, I think, I'm making this up, 30 million, 35 million, something like that. And when they went into the due diligence and found there was really no accounting system and no way to identify the profitability of a certain part that they were manufacturing because they didn't have good records about cost accounting, they lowered their offer by $5 million. So the fact that the company was not willing to invest in any kind of accounting, and they really had no idea which parts were profitable, which parts weren't profitable. They just knew it in general. Overall, they were making money, but they did not really know by individual parts which part was the most profitable, which part was the least profitable. Maybe some parts they should have raised their prices because it was more complicated to make than other parts, etc. So just really, again, I use the word crazy, but it's out there where people just don't want to spend money on accounting. And if you want to sell your business, typically what happens is the owner decides they want to sell their business and they want to sell it in the next 90 days, and there's not enough time to prepare for a sale. So as a business owner, I was talking to somebody that wanted to sell their property management company recently. And my advice to them was that you need a good investment banker, you need a good CFO, you need a good attorney, and you need a good CPA for taxes to make sure that whatever taxes are going to be generated from the sale, that you're minimizing those as much as possible. And actually, he agreed that he needed a CFO, but the one he didn't think he needed was a lawyer, which I think, definitely you need a good attorney when you go to sell your business because you want to make sure you're structuring the deal in a way that there's nothing that's going to come back and haunt you, that you left money on the table or that you didn't get the money that you thought you were going to get. A good attorney is instrumental in that situation. But without great accounting, you're going to leave money on the table. And I've seen it over and over again.